Hey everybody, welcome back. This is Carlos from the Omegavus Trade Lab with another forecast video for today, February 17th, 2022. All right, so let's get right into it. All right, so yesterday the market right at the end of the day decided to collapse and it gives us a massive sell-off. I'm just going to go over later on the levels, but the market just sold off right at the end of the day. And on the overnight session, they kept drilling on the way down until they found this major 1 hour major support, which is where they are sitting duck at this point. All right, so the first thing first, before we move on into this, we need to assess how the market is reacting. Notice here how the QQQ's SPY, that basically opens with a 930 mark, extremely selling off, very strong to the downside. And notice how buyers are stepping in, given the circumstances that an FOMC speaking engagement just came out. And basically, even though that it says low, anything regarding the Fed will move the market. So it's pretty cool that it just happened earlier today, about an hour earlier. And you can see the reaction of the market moving into the correction mode. Right, so as usual, we would like to see the reaction of the market moving into the upper side, on the upper side. However, we need to understand where are they going. If they're going to continue, this is going to be a full reversal on the way up. And we need to assess and understand the structure of the market so that we can know if the market is going to rally to continue further down, if it's just going to rally, break certain layers of ceiling or resistance zones so that it can keep pushing further higher, and so on and so forth. Whatever we do, we're going to rely 100% on the OT. We would like to see NQ, QQQ, SPY, ES mostly aligned. And when we see all of these together, including the YM or the Dow Jones and Russell, that means that the market is most likely very, very intuitive into moving in one single direction. If we pay close attention at this point of what we're seeing here, notice how the ES, YM, Russell pre-market is just pushing through. M15, it's lower than the 120% that we're looking for. So this seems to be that the market might have found a massive support on the overnight session, and it's getting started to push through. Before moving that, I'm going to go back and see where we're at and what the market has done so that we can understand what we're going through, right? So look what I'm doing. I'm going all the way back into the 31st of January, right? So I like to see all this information because this is the only way for us to assess logically what the heck is going on in the market. All right, having said that, obviously, understand I like to analyze the market from right to left, understanding where is it that we are sitting duck and why that has happened. And then I like to start drawing my attention into the structure of the market overall. This is kind of a 30,000 foot view of what I'm looking for. And obviously this immediately caught my attention. If you don't know anything about Elliott wave patterns, remember that the Elliott wave patterns moving oscillations and corrections, right? And every oscillation or impulse move, we call it the impulse move, right? So it's an impulse move up, corrective mode, impulse move up, corrective move, impulse move up, corrective move. And we move into 1, 2, 3, 4, 5, and then the market should correct coming back down. That's in a nutshell kind of what the Elliott wave pattern seems to work. So if that's the case, and I start drawing my attention to what I'm seeing here, I don't know if you're understanding what I'm seeing, I can definitely identify or spot an impulse move here, and this is an ABC structure. So if I label this somehow, I can say, all right, this could be an Elliott wave impulse move 1, or perhaps a 3, or perhaps a 5 way Elliott wave 5. I don't care. The point is that I know that for the fact that it is an impulse move, which basically what precedes it, it's a two-step pattern or an A, B, C pattern that ends up in a corrective mode, Elliott wave 2 or 4. Makes sense? Which indicates that the market most likely is going to try to push through and carry on and continue to the next Elliott wave impulse move higher. This is the logic or the thought process. Now check this out. This is where things are going to get interesting because I think what we're seeing here might be the potential of a beginning of a huge collapse of the market. I'm talking big, huge things, right? So again, I'm just saying based on the assumptions of the technicality of what we're seeing. Back into what we're understanding, if this is the structure of what I'm looking for, they should have continued further higher, and they didn't. Why? What's going on? So this is a warning signal right there that the market should have continued further higher, and immediately the market collapsed and came back down. This tells me this could be pretty much the end of an Elliott Wave 5 and getting started on a transitional phase of a move further down. That could be the case, right? If that is the case, I need to dig deeper into what is that is holding the market and understanding what can I expect from it. So if you know the drill, I like to do kind of a trend line formation. Here's a trend line formation, right? I can probably use this one as well. It doesn't matter which one we pick at that point. What matters is that that point in time was the breakage point for the market to carry on and continue further higher. Now, pay attention to something that I noticed here. This high right here did not took this previous high further higher. That's a retest and it failed. And that actually, this one is lower than the previous one and the previous one, indicating a stepping stone on the way down. This is weakness into the market. And the fact that the market sold off yesterday, right at the end of the day, and in the overnight section, they carry on and continue to do so, it's indicative that the market most likely might be willing and interested in pushing further downward based on the structure and the weakness of the market failing to continue further higher. This is important for us to pay attention so that today when the markets start rallying up, doesn't get us off guard, indicating, okay, we're moving higher and it's just a fake out. So all of these things are very important. All right, so now that I have that clarity in there, I need to assess the next level down. So this could be my next support level, right? 2 points in time. You can see it here. We got one, we got two, excuse me, major one. And guess what? The market broke up. That major blockage of resistance. If you follow the concept of what we're teaching on the accelerator program as usual, you understand that we'll like to take the width of this triangle or the width of the next 2 points or the width of the most third part in here, and use those to measure the market right from this distance and project it from the breakage point all the way to the downside. That's one way to do it. And that's exactly what we were expecting in there. So if we would have taken any one of these and applied the formula, the market failed to reach not even into the first layer of the formula. No, doesn't matter if we use this width, that one, or the bigger one. When the market just move on, they failed to even reach the first part of it. So it's another indication that even though that the structure was spot on, perfectly aligned and broken, and yeah, it produced a little bit of profit, it did fail to reach those first layer of exhaustion points, indicating a lot of weakness, again, retest and failure and coming back down. So going back to the logics here, we notice that they broke just recently on the overnight session that support area, and it's just trying to push through. The market is having a tough time on this major blockage of a gap on a 1 hour chart that was filled on the overnight session, and it's holding still, indicating a very strong intent of sellers trying to defend their position and trying to push the market further down. So all I'm saying is, at this point, how can we assess if the market is indeed reverting and coming back up again? Guys, there is only one way for us to do this. And if we put some assumptions in here, this is where the prices are right here at the 12,392 area. I will love to see the breakage of this trend line. In other words, we have to see the prices shoot up all the way past this trend line to the upper side in order for me to call this a bullish trend. Of course, for us day traders, that doesn't matter much, right? So basically, we can capitalize on the way up and then on the way down. But on the swing side of things, on the big perspective, meaning as long as they don't break that previous high and the first layer of this resistance, whatever that moment would be on the trend line, that will be the first warning that the market is pushing through, and then the level of the 12,790 to the upper side is a validation of the reversions start coming back up again. Until that happen, it's going to be absolutely difficult. And we're talking about the fact that the market it's not even there, right? We're talking, let me just look for it right now. This is where the prices are hovering right now on average. We're talking that the market must correct over 360 points, right, in order for then call this a potential reversal to the upper side. Hope that makes sense. Okay, now that we are clear and we have clarity into what to expect from the market, we're going to dive right in a little bit deeper at this point, right? So basically, I'm on a 15-minute chart. I want to see where we're at and what to expect. And don't worry, we already did the heavy lifting for you. So here's the blueprint for today. We're sitting, Doc, on a very strong 1 hour support zone, right? That resides between 407.25 and 345.25. This is the range, or the no trade zone. We also try to call it, whenever we find this, we sometimes like to call it the NTZ, right? That's kind of a no trade zone as of this morning. And once we see the breakage of those levels, excuse me, we can expect the market to move further higher, right? However, whatever happens, we understand that the majority of the intent is onto the bearish side based on the big player swings. And needless to say, on the overnight session, the movement or impulse moves are on the way down. However, we do expect a correction. And where would that correction be, and where should we expect that correction to happen? It's what we laid out in this blueprint for you guys today. So if the prices close above 407, expect the first resistance zone to be visited between 447 to 480. And then if they break free from there, they can push even further higher for another power level. All these purple levels here, these are 5 times confirmed from different analogies, order flow. We combine a lot of things. If we have a threshold of about 1 to 5 points of difference, we average that in, and that comes purple, right? Meaning it's gonna react as a magnet, is a strong point. And for me to prove this concept, look that double top right there on the overnight session. Market broke through. They came up to that purple level of 442.75 and sold out from it. If I go back in time, you can see that's a point of control right in there. That's a major resistance right in there. Major resistance right in there. Keep coming back. That's a major resistance right in there. And we can just possibly continue to pull back and find how powerful those levels are. Okay, how that kind of makes sense. So the same thing, this dotted purple level is a point of control right there. Those are, again, 5 layers of confirmation from different modalities and time frames and type of analysis that coincides on those levels. So if we do some logics here, on the way up, we have, again, they are residing as resistance, meaning it's going to stop the market to continue further higher. And we got not only one, but we got 1, 2, 3, almost on back-to-back purple levels working as resistance, meaning they're gonna try to stop the market and push it further down. Whereas on the bottom, we have a support strong level with one big one right in there. And this major 1 hour support should hold steady. In other words, as a market open, we should, I'm not saying this is what's going to happen based on the long-term perspective of things, they should try to push further higher. This is the expectations of what we're seeing here. They should push further higher, try to resist, right, or reach this resistance zone, which is also the close of the previous day zone, right? So meaning the price is going to try to fill the gap. It's going to open in a gap down, going to try to fill the gap, and if that's the case, it's going to try to come back down and visit this zone right there. And if the market is as strong as it is, we got another target right in there at the 238, and then if the market carry on and continue, we got a third target for the day residing at the 1203 level on the way down. That's kind of one way to look at it. So the next step or the next layer would be for the market to fail to carry on and break about this area, come back down, visit this area, and then try to come and visit the close of the day, right? If that ever happens, perfect. Then basically at this point, we're still on the bearish side of things. They should expect that resistance to work as it's supposed to, come back into the zone, bounce from it a little bit, and then carry on and continue to these areas as expected here. And this is the assumption, again, for the long-term perspective view of the bearish outlook of the market. Everything can change at the 9:30. You know how it is. But these are the potential expected moves that we can identify. Either way, as long as the market stays within this no trade zone range right here, we should not be looking for any opportunity. We should allow the market to do its thing first, show us what the intentions are, and from there point on, try to look for opportunities accordingly. So these areas on the resistance zone on the way up, these are potential sell setups where the market might be able to touch them and come back from them. Unless we break this purple level right here of the 12,620. If that would be the case, it is highly probable that from there on, the market, if they break free from that area, come back to visit it, and then start moving further upwards. This is what we call the bullish reversal initiation. But until that point, everything can go and visit any one of these points right here and try to come back down from them. Make sense? All right. So if you want to put some kind of logics onto it, imagine this being a huge zone, right? All of these is a huge zone, and anything from there point on could come back down unless they break free from it, come visit it, and reverse all the way together. Since we're day traders, I like to break them down in simple, smaller objectives, because we can basically we can capitalize on the way up and be able to capitalize on any one of these as potential targets on the way up. And then as it reverses, we can then use them again as potential targets if we end up going into the south side. Hope that makes sense. Okay. Long-term perspective, again, I'm expecting for the market to carry on and continue and possibly move into the south side, a break below the level of 345.25 will indicate that we should visit the 303 to 283, have a little bit of a bounce from here and carry on and continue further, hitting possibly the first target of 238.25 in a massive swing trade low of 103.75. That would be kind of the first layer of intent. The second one would be a break free from 407.25, try to close the gap up until the 12,480 area. This first resistance zone that we can see here, it's clearly identified for you right there. This is support and it's working as support, so it should push through, visit the or to try to close a gap. And if that's the case, the first expected move after visiting the gap would be to revert all the way on the way down. But if they don't, then they most likely are going to try to go and visit the next purple level, right? Resistance target level at the 512.50. And then if they carry on, then this is a major resistance sell zone, right? And this is kind of a big, huge one. As long as the prices stay below that 12,620, which is a purple, they should move all the way back down. However, and lastly, I will close with this. You know the drill. We might expect a nicer move. I'm on a 15-minute chart. I can drop to a 5-minute chart, and then immediately we can just do a quick trend line formation, or what we called a triangle formation. We got the setup already done. You understand how to calculate the targets accordingly. Whichever happens, here's the kicker of this thing that help us. If we break either one of those side of the trend lines, each correspond with the validation of the top of the no trade zone. Either way, makes sense? On the way down, if they break the trend line, that would be kind of the first initiation of a clear intent that the market is going to start to move further south. So if that's the case, let me draw it again. Let's just assume this is a trend line that we're going for, or maybe perhaps this one. If the prices come back down and it start breaking free from it, you have to understand that will be kind of the first layer, right? Once they break, we need to go and clear that 345.25, and the market will retest those trend lines and then start going toward the next level down, which indicates this area right here becomes our playground of profits. The same thing will apply on the way up, right? I'm just being granular at this point. Let's just assume that's the case. There's a little bit of a wiggle room until the top of the 407.25. By then, all we have to do is bring the OT, validating that the push is going to happen, because then obviously we will know, if that's the case, that they will go for the close of the gap. And as you probably already know, that would be our playground of potential profits on the way up, right? Those are for short-term traders or scalpers or day traders. You know the process. Either way, we have labeled for you all the levels here. We're going to share this screenshot with you. We wish you the very best of success. Just be aware of the fact that today the market is on a massive move down from the overnight session, a correction. It's pending. That correction for me is back to the close of the gap to continue further down. Unless they break above that level, then they're most likely are going to try to go for the synergy zone, right? Either way, for short-term traders, we can capitalize on those short-term moves. You can use any one of those levels for targeting or objectives, but be aware of the fact everything is against the main trend. So any single level will bring a lot of pressure on the way down. Make sure to trade or stop accordingly, unless we break above all the way to 12.620.25, and then that's a huge difference, because then we should target the green levels at the 12.790, 12.915 as our big players on the way up. All right, this was a very detailed step-by-step process for you. Hope you enjoyed it. Welcome back to the Omegavus Trade Lab. Again, we are on a test mode. Hope you enjoyed it. Just share your comments regarding these specific explanations, and hope you can make the best out of it. Please share us with us if this is valuable enough, because it takes a lot of effort, time of our part to dissect these levels specifically for you. And this is only on the in-queue. It's impossible for us to decide to move into doing it for the EAS and other markets, because it takes a lot of time and commitment. So let us know your thoughts and share the wins and the losses with us on the group, because that's what we care here, to make sure that we can help each other out accordingly. Okay, so with that being said, good luck with your trading, and I'll see you in the next video.